Joining us now is Arnim Holzer, Easterly EAB, Global Macro Strategist. Easterly has $60 billion in assets under management. Arnim, always good to see you, sir. So let's start with Trump and tariffs and trade, because that was front and center today. President Trump says, okay, we have this limited trade deal with the UK. He also said maybe he would consider lowering tariffs on China if those talks, Arnim, in Switzerland go well. I mean, we were in rally mode today. As a market pro, market strategist, what did you make of those headlines and reports?
First of all, thanks for having me, Josh and Julie. We think that there's the on the surface tariff. There's the worst of all possible situations being taken off the table, but there's still this substrate of where are we going to end up. And I think the idea that there are some arrivals here with trade deals is a good thing, but ultimately we're still trying to figure out how this whole mix comes together. We had some musings today about some tax issues around carried interest, around increasing the highest rates. We obviously are concerned around how we're going to see the difference between bottom-up earnings estimates and top-down estimates get reconciled. And some of those things aren't really tariff-related. They're just whether the underlying economy and capital expenditure plans come through. Because remember, the reason we're doing these trade deals is because we want to bring manufacturing back to this country. And so that's part of the optimism. But part of the reality is companies have to make plans. And it does look like in the first quarter, and so far, you're seeing some indications of companies being a little more pragmatic. We haven't seen job shedding yet, but I think some of the recovery that we've seen to date in the last couple of weeks has been about the good news that the worst is off the table. Will these deals that we're hearing here really connote a big upward movement, and will they bring China along? So some of this move, I think, is interesting, but it doesn't necessarily resolve some of the deeper problems that we still see in the market.
Well, and if companies are trying to make decisions based on certainty, I guess the question is, can they look at the deal today as a template for other deals? And if that's the case, if there's still a 10% baseline tariff, that's not fantastic news for them.
Well, and there are two sides to this. One, as you said, is the corporate planning side. So treasurers have to decide, boards have to decide how much are we going to onshore, how much can we onshore? And different industries, it's going to be a different mix. But there's also the issue of how is the Fed going to interpret trade deals and whether or not they end up being inflationary. There's a construct right now, we heard it yesterday with Chair Powell, that there's an equality of potential for a growth recession, for a slowdown, and an equality of inflation pressure. The numbers that we've seen give you a little bit of both. The question is, though, depending on how the trade deals get implemented and the timeframes, the inflationary impact may be much less, and the growth scare may actually be a little bit quicker. And that's where we think the Fed may be a little bit too complacent. And I understand that they'd like to see more hard data, but we know for a fact that they can squash inflation. The difficulty, if you get into a real slowdown and a real capex, kind of longer time frame to recovery, and the productivity numbers today were not encouraging, then you may have a little bit more wet kindling when you try to light it. And so our concern here, and we think investors should be aware of this, is that there's likelihood of more volatility because of some of that uncertainty than you've seen in the rally. Now, the end of today, you did see some of the market come off. Some of that may have been some of these musings about tax issues. Some of that may have been because the market saw how much we've come back and wondered if it was discounting the market correctly. But in either case, I think the volatility drop has been pretty dramatic, and there's still an opportunity here, I think, for investors to make sure that they have some kind of interest in products that play volatility, because I don't think the all-clear signal's been given yet.
To put another way, do you agree with President Trump that the Fed is too late?
Well, we never believe
risks being too late.
He made it there was a personal issue there, but I think from a fundamental point of view, the Fed has to be a little bit more conservative in their actions. But what we've seen over the last few crises is that their interpretations have not been correct. So whether it was about inflation being transitory, or whether rates not really being being impactful, or whether it was not really viewing the fiscal.
But then they did get awfully close to achieving the soft landing before these tariffs arrived.
That's a fair comment, but we did see some slowing, and we were wondering whether the productivity numbers were as durable or whether they were a reflection of big fiscal spending. And I think that issue was still going to be decided. There was still some slowing, and you're absolutely right. The tariffs definitely introduced a shock. But the question is now, if it's really 10% tariffs, is that really enough to engender uncertainty? Or was there some fundamental issue that potentially the market was seeing that treasurers and boards are going to have to reconcile? I'm not convinced either way about that. What we are very convinced about is that from a secular point of view, there is still volatility in the market. And whether you look even at geopolitical, which has somehow really not been discussed very much, we think there's still reasons to believe that shocks can still be in play. Even if the bottom may be in, there's still a pretty wide range of base outcomes. I don't think the base case is a 6 to 8% equity year. We're not convinced that a 6 to 8%, 2025 makes sense unless you get a lot of good news. And the market seems to be discounting a fair amount of good news.